Hi everyone and welcome. It's Steve Johnson here, Chief Investment Officer at Forager Funds, and I'm joined in this video by our International Fund Co-Portfolio Manager, Harvey Migotti. G'day, Harvey.
Hi, Steve.
We're both going the Jack Dorsey look. We've got a bit of work to do, but that's what we're out here to achieve. And today we're talking the US election. We're recording this on the Friday before the US election, which will be held the coming Tuesday. And a lot of talk about it out there in financial markets and how it's going to impact portfolios. And I'm here to talk about how it might impact our international portfolio. Harvey, I think we saw the last election, markets didn't get it right in terms of predicting who was going to win. And then they thought that if Trump did win, it was going to be a disaster for stock markets and everything was up. So it does seem a little bit futile trying to make predictions. How important is it what happens on Tuesday?
Yeah, well, it's an interesting point you make because a lot of people get the call right, but the market reaction wrong. But obviously it's extremely important. I mean, not just for the US, we have half the portfolio invested there, but globally it impacts markets tremendously, both because of the ramifications, whether they're political, geopolitical, whatever else, but also just direct impact on sentiment and risk on, risk off mentality. So, probably the most important election cycle every 4 years is the one in the US.
Yeah, so the bookmakers have got the Democrats favourite and most of the polls have got them slightly ahead in the election. I mean, what is most likely to change if we see a change of government? At the election on Tuesday, it won't happen until January, but what do you think the most likely changes are to the backdrop?
Yeah, look, I mean, some are pretty obvious, more clean energy, Green New Deal, less coal. Joe Biden has been going around saying that he's going to try to de-emphasize oil in the US, which obviously has global ramifications as well. So those are some of the big ones. There's obviously very big impact to US healthcare as well, which we don't have too much exposure to. Geopolitical tensions should abate to some degree. The Democrats and Biden in particular have much stronger ties to China than Trump has. So we could see some kind of globalization come back on track rather than the whole onshoring theme we've been seeing over the last few years.
Yeah, I think that last point is an interesting one because the Democrats are probably feeling that is not necessarily an issue that they should have been seen as disadvantaging on. Historically, you probably would have thought the Republicans were more free trade and more global trade. So I don't know that China issue goes away no matter who wins. So I think that's an interesting one in particular.
I don't disagree at all. It's clearly shown to have traction with voters, pushing back on China. So I think that part of it is here to stay. To what magnitude is the question, and the elections clearly has an impact on that.
Okay, so now look at our own portfolio, and we've obviously been through everything that we owned and looked at the different exposures. I know you don't really like betting on anything, so how do you think about the portfolio leading into this?
Yeah, I mean, we've, especially with the stuff we've put on over the last 6 months, but just more broadly, we've tried to be idiosyncratic here. Not take bets on, a Democrat win or a, Trump hold, and rather find stock-specific ideas with limited impact from some of these things. Obviously, smaller tail-end impacts will be there in our portfolio. We do have some companies that do sell into China, for example, like, IPG Photonics or Zebra Technologies sources a bit from China still. So, there are small impacts, but overall, I think we're set up pretty well in both scenarios. I don't think we should have to see too big a negative impact in either one. I do think that if there is a hung election, there's a tail risk of this.
Yeah, you've touched a little bit on that. Maybe even I think there's the election for president, and then there's all the other stuff that goes on at the same time, and there's a lot of permutations here about what might happen. But that hung election one is one that you've talked about as a particular risk.
It's just this tail risk that market never prices in, and it's obviously going to be bad for everyone. I don't necessarily think it'll be much worse for us than anyone else, but it is a negative impact potentially. There have been some positive changes over the last few weeks on that front. A lot of the courts in the various regions in the U.S. have said that vote-in mail ballots that come in at a week post-election will not be counted anymore. So it's not like this could drag on for an infinitely long period of time, but I think the best case scenario for the markets is either a very clear Biden win or a clear Trump win, and something that's very tight and close in the middle, like we saw with Bush and Gore. That is obviously poses a bit of a risk there.
Yep. And your preference, and we've talked about this quite a bit in recent quarterly reports, your preference is for better quality businesses and strong
100%.
Balance sheets and management teams anyway, and they tend to navigate whatever comes up relatively well.
No, 100%. I mean, you know, what we've seen with these high quality companies, I'll give you an example with Super Technologies. They, when the China tariffs came in, I mean, within almost 12 months, they're almost done now. Within 12 months of this really coming to fruition, they changed all their sourcing to dual sourcing. So China plus, you know, Vietnam, or China plus Korea, etc., to try to abate that impact. So good companies always find a way, you know, and that's the lovely thing about having good companies with quality management teams. And I think we've got a good chunk of that in our portfolio. We're not skewed heavy quality, but you know, versus some of these funds that maybe just like to invest in high quality, low compounder stocks. We don't do that. We try to have a bit of a spread, but we always try to pick high quality management teams and protect our downside. So, you know, I've been shunning away from overlevered balance sheets or you know, management sheets in transition, unless there's a stock specific case for big reversal or valuations very cheap.
I actually think it's a really difficult concept for some investors to get their heads around. A lot of what you see in the newspaper and from fund managers is, we are predicting this is going to happen and that's how we're going to make money. And we really try and shy away from that with our funds. We want the businesses that we own to deliver us results over time, rather than us sitting here gambling on particular outcomes. And I don't think this coming Tuesday is going to be any different. It'll be a big day. It's Melbourne Cup Day in Australia. The RBA is likely to cut rates even further here. Talk about making longer term money much cheaper as well. So delving into quantitative easing, and that night we'll have the US election as well. So it'll be a busy day here at Forager Funds, but we'll see what happens and we'll react to it and adjust the portfolio if we need to.
For sure it's going to be tight, you know, no matter what the polls say. It's in my eyes closer to 50-50, and even internally we have different views of who could win and, you know, what the permutations are. So as you can imagine, that spread across the market is quite dispersed as well to some degree. So it'll be interesting for sure. Yeah.
Great. Thanks, Harvey. Appreciate your time.
Cheers.
And thank you for watching. Our latest quarterly report's got quite a bit on changes to our international portfolio and in general how we love volatility, and there will surely be plenty of that around the US election. Thanks for tuning in, and you can download that from our website, foragerfunds.com.